What's going on, guys? Welcome to another episode of our SPY key analysis and updates. If you guys like this content, feel free to subscribe. We do provide this content every week for you guys. So if you do find it helpful and resourceful for your trading, it's definitely here to help you guys for free. With that being said, this week we do have FOMC on the table on Wednesday. If you guys don't know, that's simply just the Federal Reserve coming in and telling you guys whether interest rates are going to be going up, going down, and what's the sort of feel for monetary policy and interest rates moving ahead. If the market is going to receive news that interest rates are higher for longer, then it's probably bad news for the market, right? It's going to push the market lower. If there's a lot more optimism that interest rates should come down, it shows we do have a better grip of inflation. Again, market will just continue doing what it's been doing for the past 2 or 3 months here. It's just going straight up. So that's the big news to watch for. I do expect a little bit of choppier price action and a little bit more ranging. So not so much directional movement, although it could happen. I expect the big volatility coming on Wednesday in the latter half of the week. So I do, of course, suggest sizing down for the first half. Save your capital for the good volatility. All right, with that being said, let's get right into the charts here. So we'll start with our weekly as always. What do we see here from a weekly perspective? Again, pretty obvious here. This nice little resistance here now flipped to support on that pullback we've seen, I believe, on the 4 weeks ago now. So, or I guess 3 weeks ago. And essentially from there, it's just been straight up, right? As always, I mean, we've been going straight up if we don't even account for this candle. So it's been really, really good from the buyers so far. Zooming in on a candle-to-candle basis, we can see relative to the previous candle's low and high, this candle crushed it, right? New highs, new lows. Buyers go 2 for 2. The only note of concern I'd have is the size of this candle. Again, this week wasn't really the best in terms of price action. This candle really does show it. It's not really a big full body. It's a smaller size candle. So the strength of the bulls right now, a little bit in question from the previous week. It makes sense. We're at all-time highs. There's going to be some profit taking. But then again, it's a bull market. We can continue to push higher. There probably is some anticipation for the news this week. So I expect similar action to go on until as we get into the news on Wednesday. So from a bullish perspective, of course, or from a weekly perspective, I should say, we are bullish. The chart doesn't show us any signs of weakness, but of course, the only thing I could say from a bearish perspective is that candle is slightly smaller. But the buyers ultimately do go 2 for 2 with the higher low and higher high. So not much I can conclusively say from the bearish standpoint so far. Okay, so let's now get into our daily chart here, see what we see. And I mean, there's a couple of interesting things we can note here. So let's zoom out a little bit. And I'll just get rid of this for now. I wonder if you guys noticed this right here. So we have an ascending channel here. So a nice up, whatever you want to call it, a wedge, a channel. I guess I can probably do something like that. You can see, right? 2 touches, both sides. It's valid. So we do have an uptrending channel here. And it looks, I mean, it looks like a very interesting pattern of just kind of continuing onwards. You can see the candles on the daily the past few days. You can see what I'm talking about. It wasn't as like definitive upside. It was more like, I would say, choppier. You can see these few candles, not too much size to them. Nonetheless, we do have this nice trend channel here. If you also do remember, I can bring up my little rectangle tool. You'll notice again that area where I said from before, we're consolidating. We're in that consolidation channel. We finally broke out the previous Friday. So not last Friday, but the Friday before. And then we kept on slowly moving higher. Nothing crazy, no crazy moves ever since then, but just a nice slow drift higher. If I drag this out a little bit, you'll notice that if we are to come back down below this trend line and say break this trend line, there's some confluence here with this range. If we come back into the range, we can't hold the upper bound of this range here. So this 478, 47, I would say 478, 479. You can't hold that. It comes back into the range. It's what we call a range break failure. And you have a trend line break here. So that support trend line also breaks. There's two key notables on the daily where we could see some weakness start to show up, some sell side pressure start to show up. Again, we're just trying to see what could happen in the future. Nothing, of course, is conclusive at this point in time. Bulls are still in control. As of now, the chart shows us on a daily time frame that we are starting to slow down. Again, I do think it's because of anticipation for FOMC. But nonetheless, what the chart's telling us, it's slowly drifting higher, but I wouldn't be surprised to see us come back down, potentially retest this at the very least at 478 level. It is the top of our big 1 month range here. So that's what I see on the daily chart. If I have to see anything else, if there's really anything else to note here from a larger time frame perspective, let's go to the 4-hour chart. I do note that on our 4-hour chart, so remember how I marked my supply and demand zones, right? I always want to see at least three candles consecutively, three consecutive trend bars in a row. We actually see that right here. So I'll go ahead and I'll use the rectangle tool. Oops. The rectangle tool right about here. You guys notice that, right? You can see 1, 2, 3, 4. These huge, nice candles. Not, I guess not huge, but definitely strong candles, right? So we got strong candles here, strong trend bars, 3 in a row. That's a demand zone, right? So I don't use any time frame lower than the 15-minute for zones. I typically do use the 15-minute. Sometimes the 4-hour and the daily do provide some really nice zones, and there's very strong zones if they do materialize. So this is a zone to watch as well. I would probably say closer to this, right? You always want to capture the base, the body of the basing candle. So this puts us at about 44 to 43. It's a nice strong zone to think about. Should we retrace back down to that level? Again, it does come sort of close to the top of the daily range, although that one's about 478, 479. So nonetheless, it's a key level to keep on watch. It could also be a test of that daily trend line that we were talking about. So that's a key level to watch there as well. We keep going, I would say do a little bit more, I would say near-term sensitivity analysis. Let's see what we have here for SPY. So near term, what I see, interestingly enough, we have a little bit of a ascending wedge or ascending triangle sort of pattern. You can see here that if I get my horizontal line out, there we go. That makes more sense. Okay. So you can see here, there's a little bit of a double top. Not as clean up here. I mean, we did try and come up back above 49. And then we failed. So I would say it's pretty, I mean, it's pretty much like more of an estimate, but it does look pretty good, right? It looks pretty nice and clean. We got 2 clean touches, one here, and we got a few here, although these are a little bit more messy. This ascending trend line, though, has been very clean, right? It's been really, really clean. Now, going into tomorrow's session, I don't know if we're going to break it here. We closed just below it. So just for some near-term scenarios prior to Wednesday's event, we can go ahead and draw some scenarios here for you guys. So the first one, obviously, I mean, do we break this range or this support trend line? You could see a retest of that 474, or sorry, not 474, 487 level. So that would be 487, right? So right about here, I'm slightly bearish, but I would say a little bit also still neutral. We have quite a few demand zones and key levels to still test. I'm not quite conclusively bearish until we're back below 478 for like that's the daily range that I was talking about. You also had that trend line break on the daily as well. So you get back below 478, that's more conclusively bearish. But here I would say near term slightly bearish. It does look like a nice intraday pattern to keep on watch. I would say if we do end up somehow coming back above, the 49 level, actually holding it. I can make that green. That does look bearish, or sorry, bullish. That does look really bullish. I do think we'll see 490. 100%. I mean, very, very strong chance we see 490 in this case. And then, of course, you are a little bit more neutral, and I would say this area right here. So I'm neutral here. I can write this down for you guys. You know, so neutral in this range between 487, 4 and 49. And then slightly bearish here. Slightly bearish below 487. So if we do end up gapping a little bit below 47, watch for the retest. Could be a nice area for at least the near-term short. I would say more of a scalp more than anything else. And then, of course, bullish here. So bullish back above 49. So again, from the bearish point of view, from a bearish point of view, this is more of a scalp. I'm going to be very, very clear with that. This is more of a scalp. It's nothing. I would definitely not hold like runners or anything like that. We're more conclusively bearish back beneath 478, 477. So wait for that for more technical confirmation. I'm still more neutral between 47, 49. It does look like we're ranging. But again, above 49, should we hold? I do see us hitting 490. But we honestly, like, we could just arrange a little bit more until FOMC. Typically, in the weeks where we do have the interest rate news, we tend to have choppier price action leading up to the news event. So honestly, some people just choose not to trade until after the FOMC event. It's totally up to you. But FOMC is very, very volatile. So if you are trading, you haven't been exposed to that situation, I would definitely study the price action of previous FOMC events because it's very, very volatile. And of course, if you don't know what you're doing, you could lose a lot of money really fast. So you really want to be careful there. But that's also the fun part where if you know what you're doing, you can definitely create some good profit there. So I would definitely wait until FOMC for some more direction. But near term, tomorrow and Tuesday, this is our scenario analysis going in. I would suggest sizing down prior to the news event. And of course, if you guys have any more questions, feel free to pop into the Discord. The link to that and much more is all down below. And as always, feel free to subscribe if you found this content useful, if you feel like it can help you with your trading. All right, guys, with that being said, good luck, trade safe, and we'll see you guys next week. Cheers.